Hello everyone. This is the pre-market report video for today, 21st December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. At present, most of us know yesterday's price movement was the worst session in last 9 months. And the main reason for that, I think it's just a rolling effect of profit booking. I don't think anyone will deny that, and the same thing happened in US market as well, which we'll discuss in a moment. However, for our market, I just like to highlight the trigger point. If required, please pause and have a look. The top one is Nifty and the drop was very progressive, not sudden, since except last 30 minutes, yesterday HDFC Bank throughout the day supported the market. Anyway, always for the progressive downfall, the most probable reason will be just profit booking. Now, let's look at that trigger point. The problems were Reliance and SBI. The left bottom price movement is Reliance and the right bottom is SBI price movement. As we see, there was a sharp fall around in the afternoon. Now coming to the issue, around 12:45 p.m. London Stock Exchange Group released the report about Indian companies fundraising via US dollar bond in 2023. It came as just 1.6 billion US dollars, the lowest value in the last 14 years. Just for info, in comparison, in 2019, it was over 20 billion US dollars. I mean, it makes sense. Usually, before 2019, dollar bonds will be low around 1 or 2% coupon rate. But now the interest rate is higher, so the dollar bonds will be around 7 to 8%. And thus, the Indian companies don't want to raise fund at constant higher elevated coupon rate, which is good and understandable. But as per the same report, the problem is instead of the dollar bonds, Indian companies opted for the foreign currency loan at the variable floating interest. I mean, in 2023 alone, they borrowed over 22 billion US dollars, which is the highest value since 2014. We know floating loan is always riskier, and also as per RBI data, at present, Indian rupee is at least 5% overvalued. So, rupee dropping its value will make this loan as very costlier mistake. Anyway, in that 22 billion US dollars loan, Reliance Industries alone borrowed for 8 billion US dollars as of October. I mean, in Indian rupee term, it's around 60,000 crore rupees. And the same report suggests in the same way, SBI is planning to raise funds early next year. Just for info, REC, Canara Bank and Adani Port are some of the other companies who already borrowed significantly in foreign currency. So that's it. I think this is the trigger point. In addition, in the last 2 days, there was this new panic regarding this new variant JN1 that found in Kerala. However, day before yesterday, WHO's no panic statement kind of suppressed that. But yesterday, once the market was down, this JN1 variant also added some worries, which in turn created the snowball effect on the profit booking. It just Indian market was down and all other European market was trading firmly in green. Then coming to US, the story is not so different. Before their market opening, Conference Board released the US Consumer Confidence Index. The data came as 110.7 against the expectation of around 103, and it is also sharply up compared to November month. This is very positive as this is the second highest level in the last 2 years. Then the existing home sales data also comes as good. So in line with both the positivity, US market traded positive exactly like Indian market for most of the day. In fact, during the market time, Dow Jones reached the all-time high value and S&P 500 was only 18 points away from its all-time high value. Then the problem started. I mean, just for info, US market closed positive continuously for the last 9 trading sessions without single negative close. Because of this rapid increase, S&P 500 call option delta exposure reached 10.8 billion US dollars, which is the highest ever recorded value. And also in percentile term, it reached the 100 value. So as soon as this 100 percentile hit, US market also turned down. Just for info, delta exposure means degree to which an option is exposed to price shifts of the underlying asset. Simply for hedging required more money, which in turn made the call option premium keeps on shooting up uncontrollable. Anyway, this created the profit booking in US market as well. Thus, in the end, Dow Jones decreased 1.27%, S&P 500 down by 1.47%, and Nasdaq 2 down by 1.5%. In case of VIX, increased 9% and moved from around 12.5 to above 13.5. Then coming about oil, we discussed enough in the last two pre-market video and it haven't changed much. At the time of this video, Brent crude is trading around $79 per barrel and WTI crude is trading at $73.5 per barrel. Regarding Indian ADR, both Indian market negativity and US market negativity was transferred completely. Only HDFC Bank was down around 1%, all other three dropped around 2%. About GIFT Nifty, again in line with US market, it dropped further and today early morning it closed at 21,064. Equating it with spot market, at present it's indicating another 150 points gap down. As a summary, global momentum deteriorated severely and it is evident in US market, Indian ADR and GIFT Nifty as well. I hope it won't create another snowball effect today. Let's see. There are some positive news related to auto stocks, but I think for the moment it's irrelevant. Anyway, moving on. Yesterday, as per stock open interest, Hindustan Copper, India Cements, UPL, About India, SBI Life Insurance, Tata Chemicals, Ashok Leyland and Astral got an increase in open interest along with a negative close indicates the short build-up. On the other hand, HDFC AMC, Britannia Industries, AU Small Finance Bank, Tata Consumer Product and ONGC got an increase in open interest with a positive price close indicating long build-up. About the things to look out, there is not anything important that I can think of before and during the market hours. However, in the night, US final Q3 GDP data is scheduled to release. Then weekly jobless claims, Philadelphia Manufacturing Index and Fed balance sheet are some of the items we need to keep an eye out today. Coming to technical, as we discussed yesterday morning, Nifty climbed a new high 21,593. But then it had a sharpest single day fall in the past 9 months with Nifty ending deep in the red after a volatile day of trade. Hence, on the daily chart, it forms the large red candle that engulfed the past 4 days' entire positive run. Now, the next support point is at 21,000. If it breaks, then the 20-day exponential moving average is at 20,800, which is the crucial support. A decisive break of that, it could create a deep correction. In case of a rebound, 21,300 to 21,400 would be the immediate resistance. The RSI value sharply down from overbought zone around 90 to just 68. Here, we can consider this as a negative crossover. Hence, the current scenario suggesting Nifty might take another break here. However, as long as it trades above 21,000 mark, we can expect the positive rally to resume. Then in case of Bank Nifty, similar to Nifty, it also took a tumble, but the fall was not as severe as that of the Nifty. Bank Nifty opened a gap up of 215 points, but finally ended negative 426 points. Thus, on the daily chart, it also formed a long bearish candlestick pattern. Here, until it holds below the 47,750 zone, we can expect some weakness, which might push it further down towards 47,200 or even to 46,850 level. Hence, 47,750 is the crucial point and it is also an immediate resistance. On the options front, the maximum call option open interest was at 21,500 strike, then followed by 21,600 with meaningful new call option writing at 21,300 strike, then 21,200. Thus, from the options data, we can say 21,000 might act as the near-term support. Whereas the maximum put option open interest was at 21,000 strike followed by 20,500 with new put option writing at 21,000 strike then 20,700. Hence the resistance is at 21,200 to 21,300. Just for info, the put call ratio PCR dropped significantly to 0.68 from 1.13. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers educational purpose only. Thanks for watching.